Moonplatoon, remember when Home Depot Hank gave us the opportunity to read his DD? Well, now he is back and giving us the GME. It's all coming together. Oh yeah. Is that the Crunk meme? That's one of my favorite ones. Yeah, it's all coming together. Apes, I come to you as a fellow primate with excellent news. And if you guys want to hear this news, it's a pretty compact little DD here. So make sure to stay until the end of this video. Smash that like. Let's try to get 1,200 likes on this groundbreaking everything theory crafting video here. And if you guys haven't quite yet, we're on our way to 100K subscribers. Would love to see you on the path to 100,000. Without further ado, before I come to you with excellent news, my wife finally left me. Now I have her boyfriend all to myself. Before reading, just express that the predictions and dates could not be taken as absolute, and these are just opinions on what could be happening. We don't do dates in this community, so if Home Depot Hank had committed the cardinal sin of putting a date on here, remember, this is not financial advice, and we're just giving our 2 cents on what we think could be going on. Okay, the news. Amazon plus Chewy execs. There's an onslaught of news regarding GME in the past few weeks. Let's look at them, make sure you guys have caught up. The news, Amazon plus Chewy execs being appointed. RC, Ryan Cohen, being named God of the Board. He has been named the chairman of the board of directors starting June 9th after the annual meeting. GME announced the search for a new CEO, which means George Sherman, person who was known for brick and mortar like the Home Depots of the world, out of here. We are looking to transition and pivot over to the e-commerce world. GME is paying off its senior notes today. That was yesterday. Earlier on, we saw at the end of that live stream that they are now paying off $216 million worth of debt altogether. And they could be doing it at any point before April 30th. The announcement of GME's right intention to sell 3.5 million shares or $1 billion in value. This may not seem important. We saw this note as a misunderstood signal, right? People thought it was bearish, but it was majorly misunderstood, which caused the DD that we mentioned earlier, which is the trouble with panic selling. People who have jumped into the markets for the first time might just not understand these signals as well, which is why you guys are here, learning your financial journey here. The announcement of the definitive date of the annual meeting, 69, June 9th, and that's not even a joke. Why does all of this matter? The past 2 weeks have been bombarded with news from GME, and almost all of it deals with leadership of the transformation. They believe that this bombardment of news is extremely intentional. The reason why that he believes this is because the announcement of the right to sell those shares. When GME made this announcement, the stock was at 190 bucks. GME knew full and well that anytime an announcement like this happens, the market would react negatively to the stock. Hold on a sec. And because GME is so volatile and the victim of abusive shorting, that negative reaction could have been huge. Despite knowing this, they decided not to sell at that moment. So from that, he deduces that the lack of action that GME believes that the stock will go well above the $190 level sometime in the future, because if they really wanted to capture the value of the stock at 190, they would have just sold the shares instead of reserving the right to do so. So this is their essentially the same message that we saw in their earnings report when they talked about in their 10K exactly where the mother of all short squeezes could happen if it does happen. That kind of verbiage is essentially saying mother of all short squeezes, not yet a thing quite yet. The squeeze has not yet squoze, is what they're trying to say. All shorts must cover, and now they want to reserve the right to sell the stock at 3.5 million so that they can reap the benefits of this $190 price tag. They could have done it right away, but no, they want to reserve the price to do the right to do so, which we've explained in previous DDs before. They are looking positive for the future of the stock. With that being said, they believe that they are actively trying to set up the stock for a massive run that could potentially trigger a squeeze so that they can capitalize on a price that is well above 190. If this wasn't their plan, it would make zero sense that it didn't just sell at 190 like we just explained here. Finally, when almost every analyst boomers says that GME is grossly overvalued, it is irresponsible of you as a corporation not to take advantage of that extremely elevated share price unless you have reason to believe that it will soon be substantially higher, right? This is just every single analyst telling GME, hey, the value of your price, it's so crazy, it's so high. No, they could have just exercised their right to sell right then. 3.5 million is a pretty good chunk of stocks, especially at 190. They chose not to, and that was there, and that intention was made clear right there. To add to this, GME has been repeatedly warned the SEC filings that they suspect shorting activity in the stock, right? We just explained that in their earnings report. This, to me, seems like they're recovering themselves so that they don't get sued for market manipulation if it does indeed squeeze. What's even more interesting about this is that maybe they have data that is not available to apes and other primates that suggests that the shorting activity is even more abusive than any of us thought. Again, it's just a theory. A GameStop theory? No. Just a theory. Game catalyst. But what could the next announcement be? It's very difficult to actually know. The paying off of the senior notes caught the Home Depot Hank by surprise, but isn't news that would be really propel the stock to the stratosphere. They believe that the next catalyst would be something about either the CEO position, right? Because we don't know if Ryan Cohen is going to be tapped on the shoulder for both CEO and chairman of the board of directors. GME could very well announce Cohen as CEO, which would be undoubtedly send the stock to the stratosphere. They could also announce something about an acquisition or something related to their shift to e-commerce. Again, that's speculation, guys, but they believe that GME is going to make some kind of catalyst announcement soon to push up the price. However, the biggest and most crucial catalyst could be the share recall. We mentioned earlier there was a Sunday video I talked about how you guys needed to make sure that you have called your brokers for the share recall. Only individual investors can do that. GME itself cannot recall shares. So if there was an investor with a ton of shares in GME who has an active interest in making the stock go higher and has tweeted cryptic messages about hating shorts and bears, oh wait, if Cohen or another whale with a high stake in GME announced a share recall, that could be an ultimate catalyst for us. So we're waiting for if that is something that Cohen is waiting to happen, because he has a ridiculous stake in GME here. Personally, they thought that Cohen news would propel us to the moon, but I guess not. That shows that the proof that the shorts are really in deep, right? This is really positive news. And yet we are not seeing the catalyst hit, because as we see, when we had that positive news earlier for GME, we get that smothered. Look at this run up here. Right, the smothering is something that we can see from the VWAP, something that has pulled up the VWAP here, but when the small run up in the beginning of the day, the VWAP barely blinks an eye. So downwards pressure does not hurt the VWAP the same way that upwards pressure, natural pressure, actually bring the volumetric weighted average price upward. Timing on the possible above-mentioned catalyst could not be more perfect. First, our Lord and Savior Mr. Gill, right, Roaring Kitty's calls expire this Friday. At the same time, GME is forming what many are calling the mother of all wedges on extremely low volume. We can see that picture below. The apex of the wedge could be this Friday or Thursday, right? Could be tomorrow, but could be pushed back sometime next week if we still trade sideways. As many of you know, the options volume for this Friday is also through the roof, as most of GME's monthly options are. What they're hoping is that GME announces some kind of catalyst in the coming week that will make a whale who is not invested in GME think, the stock is consolidating and the giant wedge pattern is relatively cheap. It's time for some chaos. So it seems like Home Depot Hank is still counting on the whales as the major catalyst instead of trying to put our hopes on the DTC, which is one of the other opinions. Right now there are two camps, right? We got camp whales and Ryan Cohen, and we have camp the DTC is going to come and clear out the hedge funds here. So both of which I see merits in both conversation. I don't think that you should discredit either side. So here's the mother of all wedges that is forming with the mother of all cup and handles, right? This cup and handle might be a stretch. So we have this cup, and this handle really is a frying pan right here. Let's pull this up a little higher. So this handle really is a frying pan with this long extended handle that's becoming more and more of a stretch. However, this wedge here is a macro wedge not seen in this amount of low volume to the end of this wedge. We talked about bullish pennants before, right? We know that at the end of this period of consolidation, there needs to be some seriously low volume compared to the breakout. So we have that on our side. Finally, we said in previous posts that GME is correlated extremely closely with the VIX. Many have said that it's inversely correlated with SPY, which seems to be true. right? So this is just a little bit of correlation of other macro markets. Look, SPY is at 412 and is overbought, and VIX is at $16 pre-pandemic levels. Looks like the market is thirsty for some nice volatility. More on this, we encourage to read the Everything Short with Austin Tobit. A. Tobit has come on the show multiple times. He even co-hosted my interview with Congressman Ro Khanna. So yes, if you haven't seen that Everything Short video, it's on the channel, which leads directly to his DD in the description. Quick note on short interest. Just wanted to give their thoughts on the GME short interest, right? As many of you know, there are a ton of different numbers on GME short interest. Most boomer websites say 19 to 50%, which is still extremely high, still above 10, still above the level that Volkswagen needed to squeeze. Most apes say it's above 100% at minimum. They personally believe that websites are correct because the data is being altered through ETF shorting. We even did the math for AMC. We'll do that similar math for GME soon. However, they believe the true short interest is above 100%. So I also am of the same camp based on the calculations that these websites are like. They're not. I don't think the websites are lying. They just have the calculations that makes less sense based on the actual proof of ETFs and naked shorting. So as of right now, that rate is grossly lower than the true rate, which once again, they're not trying to measure the true rate. They're trying to measure whatever kind of calculation that they have already said is their short interest rate. So I think he goes on to talk about that a little bit more. Also, purely based on logic, it doesn't make sense if every boomer analyst thinks GME is grossly overvalued that they wouldn't short it. So there's no way that GME's short interest is anything below 50%. That's a good point. It's either you can have it one way or another. If you think it's overvalued, you would short it, or at the very least you would put a bunch of options on it, right? But normally you would imagine that if everyone thinks it's overvalued, you would want to short it. So in that's the sense, is either the short interest is really high or the stock is not overvalued. It's got to be one or the other. This is actually a great point to end on. Hopefully that wrinkles your brain a little bit more. It has to be one or the other. Conclusion. We have some technicals lining up very nicely. A company with a vested interest in seeing the stock soar right now. A plethora of potential catalysts. A definitive date for when shares would need to be recalled. Abusive shorting. A failure to deliver cycle. An insanely volatile stock that loves good news. And a market that is thirsty for some volatility. And one more thing. Some primates that refuse to sell. Stay strong, apes. If you guys are as diamond strong as these Meatball the Space Legend and the Gorillionaire tiers here, and you want to be shown at the end screen of these guys and chill with me and Meatball, and even see some cool other features like private live streams, go ahead. Join the button down below. It says join, or go down to the Patreon button, and we will see you all in the money. Thanks for joining.